This stock isn't getting talked about like the flashy AI names. It's not dominating headlines every single day, but quietly, it may be becoming one of the most important enterprise AI companies in the world. And if the current trajectory continues, ServiceNow could end up being one of the biggest long-term winners of the entire AI cycle. Because while most investors focus on AI models, chips, and hype, ServiceNow is positioning itself at the workflow layer of enterprise AI, and that layer may become incredibly valuable over the next decade. Today we're looking at ServiceNow, ticker NOW. ServiceNow started as an IT workflow platform, but it has evolved into something much larger. The company now operates across IT operations, customer service, HR workflows, enterprise automation, and increasingly, AI-driven productivity systems. And the market is beginning to realize something important. AI is not just about generating content, it's about automating enterprise work. That's where ServiceNow becomes extremely interesting. Now let's talk about the numbers. Because the numbers here are elite, ServiceNow continues to produce strong subscription revenue growth, expanding enterprise adoption, high renewal rates, and improving free cash flow generation. The company's annual recurring revenue continues climbing aggressively, while large enterprise deals keep increasing. That matters because enterprise software becomes incredibly powerful when customers stay, spending expands, and workflows become deeply integrated, and AI may accelerate all three. Now, here's what I think the market is underestimating. Most investors still think of ServiceNow as a workflow software company, but I think it's evolving into an enterprise AI operating system. Because once companies begin integrating AI agents into workflows, they need orchestration. They need automation layers. They need systems connecting employees, data, approvals, customer interactions, internal processes, and AI-generated actions. That's exactly where ServiceNow sits. Now let's frame this through the fallen growth valuation model. I break every company into three drivers: revenue growth, margins, market multiple, and ServiceNow scores extremely high across all three. First, revenue growth. Enterprise AI spending is still in the early innings, and ServiceNow is already deeply embedded inside many of the world's largest organizations. That creates expansion opportunities across AI workflows, automation tools, digital transformation, and productivity infrastructure. I believe ServiceNow can realistically sustain high teens to mid 20% revenue growth for years if enterprise AI adoption accelerates the way many expect. Second, margins. This is one of the strongest parts of the story. Software businesses with recurring revenue, high retention, and expanding enterprise usage can become margin expansion machines over time. As ServiceNow scales, free cash flow generation could become enormous, and markets reward that very aggressively. Third, the multiple. This is where AI changes the valuation framework. Historically, ServiceNow traded as a premium enterprise software company. But if the market starts viewing it as foundational AI enterprise infrastructure, the valuation ceiling expands significantly. Now let's walk through the scenarios. In the bear case, enterprise spending slows, AI adoption takes longer than expected, and valuation multiples compress. In that scenario, Now could trade roughly in the $550 to $750 range over the next several years. In the base case, ServiceNow continues expanding enterprise adoption, AI products drive higher customer spending, and margins continue improving. That scenario could support a valuation range around $1,200 to $1,800 over the next 3 to 5 years. But the bull case is where things get very interesting. If enterprise AI adoption accelerates aggressively and ServiceNow becomes deeply integrated into AI workflow automation globally, the company could evolve into one of the most important enterprise AI platforms in the world. In that scenario, I believe ServiceNow could potentially move toward $2,500 plus over the long term. Now, obviously, the risks are real. Enterprise spending could slow during economic weakness, competition across enterprise AI will intensify, and premium software valuations can compress quickly if growth slows. But the bigger picture is what matters here. I think the market is still underestimating how large the enterprise AI workflow market could become. Because companies don't just need AI models, they need systems that integrate AI into real-world business operations. And that's exactly where ServiceNow is building dominance. My overall view is simple. I think ServiceNow has a real path toward becoming one of the most important enterprise AI companies in the world, one of the core workflow layers for enterprise automation, and potentially one of the defining software winners of the AI era. And if that happens, today's valuation may eventually look far smaller than most investors currently imagine. If you want to see which company's AI is flagging before Wall Street fully understands the story, follow the Fallen Growth series.